Well, holy flippity flip flop flapping smokes, everyone! The car market super bubble has just burst. Repossessions are rising, delinquencies are rising, prices are falling, and market psychology is now shifting from fear of missing out to fear of not getting out, with many car loans now underwater. And the car market and the auto industry is in a race from the top to the bottom. And why buyers before were buying cars fast, well, now that they're seeing their car prices crash, they're getting furious. So everyone, should you sell your car now? Will you be able to get that dream car for a big discount very, very soon? Well, that's exactly what we're going to go over in today's video. So let's not waste any time, everyone. This is going to be an action-packed episode you're going to want to watch to the end. So let's get straight into it. Now, I'm sure you've noticed that the car market, not just in the US, but in Australia, UK, Europe, has been going crazy over the past few years. With a huge chip shortage, factories being shut down, supply chain issues, people not wanting to catch public transport during 2020 and 2021, and so these people that didn't normally have cars went and brought used cars. This led to a huge used car market bubble with prices soaring 50% over 18 months. But everyone, this crazy car market super bubble was completely unsustainable, and all the forces that made car prices go up are now going to make car prices go down. And it wasn't only this that made car prices go up. A lot of subprime lenders before would only lend 85 to 90% of the car's value. But because of the crazy shortages and the crazy used car market with prices accelerating so much during 2020 and 2021, lenders, even for subprime borrowers, lent as much as 140% of the car's value. Now, I don't know about you, but I've seen this movie before. I've seen how it plays out, especially with a lot of these subprime loans. And did you know up to 90% of auto loans had no income verification? But things have hit a tipping point. Look at this, everyone. Look at this, everyone. Auto loan debt reaches a record 1.43 trillion. And not only that, typical monthly payments for a new vehicle has hit a record of $743. This is absolutely insane, everybody. People are paying $733 for a car payment. This is what somebody's mortgage used to be not too long ago. And we're seeing many cases where people are paying over $1,000 a month just for their car payment. So with record auto loan debt, record repayments, loose lending standards, people, this is a recipe for disaster. And I'm going to show you the facts that we're starting to see the disaster play out. Look at this chart, everyone. This is the used vehicle value index. And we can see here, it hit a record in 2021, but we can also see here in 2022, specifically late 2022, we're seeing a huge reversal. Prices of used vehicles that were sold at auction in August fell 4% from July and are down 12.5% from the peak in January. These are no small losses, everyone, and the losses are accelerating, down 4% in just 1 month. When you annualize that, that's losses of over 48%. Now, these price declines may slow, but it's showing that prices are declining at a rapid rate. Now, what cars specifically are falling at the fastest pace? Well, look at this, everyone. Chrysler's are down 3.8% over 90 days. Fiat is down 4.5%. Saturn down 5.02%. And look at this, Tesla down one of the most out of all car models, down 6.37% over the past 90 days. Now, I wonder if that has anything to do with the huge cost to replace the batteries in Tesla, and also to do with California telling people not to charge their EVs because there was a huge power shortage, which is completely insane, everybody. People need their cars to get to work. Imagine what would happen if all of a sudden, in 2030, like their goal is to make all new cars be electric. What would happen if we had a blackout and people couldn't use their cars to get to work or get to their locations? Just something to think about. And some other warning signs for big used car companies where investors are dumping their stock at record pace. Look at this, everyone. This is CarMax Inc.'s stock price, and we can see here over the past month, it is down 20%, but we can see here on the 28th of September, their stock price collapsed 24.6% in 1 day. So that tells me smart money, big money knows that car prices are going to be falling, and also car sales are going to collapse rapidly. And I've spoken to a few auto dealers that go to these auctions to buy these repossessed cars from the banks, and they're saying that sales are slowing drastically. And I've even heard from some auto dealers go to auctions and there's been no sales whatsoever. But you want to know what's the biggest risk of all is these subprime loans going bad, and also even prime loans are starting to sour and are going bust. And this is going to be a big headwind for the car market when we see repossessions skyrocket and people starting to give back their cars because they're so underwater. Look at this, everyone. Car repossessions are surging, a troubling sign for the used car market. Repossessions of vehicles are surging and have even doubled among so-called prime borrowers, or people with excellent credit scores who are considered the least likely to default on their loans. So that's right, everyone. It's not just the subprime and the deep subprime cars that are getting repossessed. Possession for prime borrowers have doubled. And what I think the reason for this is because of surging inflation. Food costs are surging, gas prices, petrol prices are surging, rents are surging. So a lot of these prime borrowers with record monthly repayments of $750 to $1,000 in some cases are simply saying, look, we can't afford to repay this car anymore, and they're getting repossessed. They're having to make the tough decision by keeping the car or putting food on the table or keeping their energy on or paying their rent. And with inflation not slowing down, the situation is only going to get worse. And we're going to see people may not get their cars repossessed, but for example, if they've got a $50,000, $60,000 car in the driveway, they may think, look, we'll sell this car and we'll downgrade. Now, again, during 2020 and 2021, where people got the stimulus checks in Australia, people could withdraw out of their retirement. Maybe they could afford it then, but they can't afford it now. But those government supports have ended, and many families are now facing budget shortfalls given the highest inflation in 40 years. As a result, more consumers are defaulting on their auto loans, with subprime repossessions up 11% since 2020. And again, with people borrowing 140% of the car's value and then their car price falling 10 or 20%, maybe they are just going to let their car repossessed. And normally what happens is it takes about 90 days of late payments or for people to be delinquent before they start the repossession process. And what I think is going to happen is we're going to see repossessions really accelerate towards the end of the year and early 2023. And because we had record price appreciation over the past 2 years with used car prices going up 50%, well, I think we're going to see record used car price declines. It is just market psychology. I talk about the stock market, the housing market, cryptocurrency market, bond market, gold and silver. All markets are the same. They all have psychology of fear of missing out or fear of not getting out. When prices are rising, people want to FOMO in. They'll pay whatever price. But as people start to see prices are falling, they're going to say, wait a minute, prices are falling. Maybe I'll wait 6 to 12 months for prices to go lower and then I'll buy. And then inventory keeps building up. I think what's going to happen is a chip shortage late this year and early 2023 will get better. Supply chain issues are going to get better. There's going to be more factory output, so there's going to be increased supply, but less and less demand. Banks have been preparing for this. When they've been putting out their earnings reports, they've been saying that they've been increasing their cash positions for loans going bad. Now, this combined with the Federal Reserve still continuing to raise interest rates rapidly, because we all know the auto sector and the car market relies on debt. So as interest rates go up, people are going to be able to afford to borrow less and less. And it's just simple supply and demand. Prices are going to have to fall much, much lower. So everyone, if you're thinking about buying a car right now, maybe the best thing to do will be to wait for a few months. And if you had a dream car in mind you've been wanting to buy, maybe your opportunity will be coming soon. But again, only if you can afford it. With a lot of issues going on in the world at the moment, I think a luxury car should be the least of your worries unless you got the spare cash lying around. So everyone, that was just a quick update with what's going on with the car market, with the auto sector. What do you see happening in your areas? Let me know down below. Thanks for watching. You're awesome. I'll see you all in the next video.